What's up, YouTube? So this is your boy Kamo. And today I have something new. So this is my first video on YouTube. Actually giving lessons. So I have one video there. So this is the second one, but in terms of giving lessons and things like that, this is my first video on lessons. So today, what I actually think I have few clients that I'm teaching and things like that. But what I actually think that people don't understand is the structure of the market. You need to understand the structure of the market for you to actually just keep on trading. So I'm gonna teach you guys a little bit of market structure and things like that. So the market has three directions, which is an uptrend and a downtrend and a consolidation. A consolidation is whereby the market is not going up or it's not going low. It's just there, just bouncing. That's a consolidation. Okay. So there's a downtrend, there's an uptrend, and there's a consolidation. So that's how the market moves. It moves in three ways: where it's going up, and where it's not going up or not going down, and where it's going down. You see. Okay, so what I'm gonna teach you guys about. So it's support and resistance. Support and resistance is just like this. So you call this your support. I mean, it's support and resistance. You call this your resistance. Hence, it's called the resistance because it's resisting the bias from going up. It's resisting the bias from going up. Hence, the bias are gonna move down because it's a resistance. It's resisting the bias from breaking through. Okay, this is called a support. You see, it's called a support. It's it's supporting sellers from going down. Hence, they are bouncing from here and then going up. You see, okay. Support and resistance. So what I like to do, just to make people understand, is that I like uh I like calling I like calling the support and the resistance Shandy. I like calling them I like calling the resistance it will be the ceiling, and then this will be the ceiling, and then this will be the floor. Okay. So imagine you are in a house, and then you have a ball. Let me say a tennis ball or golf ball, as long as it can bounce. Okay, so you bounce it down. It moves from the floor, and then it goes in the ceiling. From the ceiling, it moves down to the floor. From the floor, it moves up the ceiling. So that's how it goes. That's how it goes. So it doesn't only keep on going like that. So there are now times where the market will move from the floor to the ceiling, from the ceiling to the floor, from the floor to the ceiling. And actually, now it's no more gonna play by the rules. So it's gonna break the ceilings, and then now, so when you actually come across something like this in the forex chart, is that so when the market break the ceilings, so things are gonna change now. So when you see it coming back down, it's coming for a retest. So this ceiling here, it's no more gonna be a ceiling, but it's gonna be a floor. Hence, it's a newly formed support. So this the market just created a new support because it broke out of this. It was supposed to be playing in here, but it broke out. This is called the breakout. So so now you have your new ceiling. So you ain't gonna use this one anymore. You will use it, but let's not focus about it now right now. So you have your this your what now this was your ceiling, now it becomes your floor, and then it becomes your floor. Now you have to look for your new ceilings. So these that's your new ceilings. So the market is gonna be like, okay, from the ceilings to the floor, from the floor to the ceilings, from the ceilings to the floor, from the floor to the ceilings, from the ceilings to the floor, until it actually decides to to break out. So once it breaks out, you are gonna do the same thing again. Put your so your ceilings is gonna your ceiling is gonna become a floor, and then you look for your new ceilings. How do you look for your new ceilings? When the market breaks out, when for instance the market breaks out, when the market breaks out, and then you see it going back up, here this point is where you put your horizontal line. That's gonna be your newly formed support or resistance. So that's how the market moves. So it moves uh, in things like, you must take it as a floor in a ceiling. So when the ball goes on the ceilings, it bounces from the ceiling and then move back to the floor and things like that. Okay, so now we are gonna go deep into market structure. So market structure, it's actually so this is the structure of the market. Okay, so that's this is a bullish, it's a bullish trend, meaning in a bullish trend, you are only supposed to look for selling opportunity, I mean for buying opportunities. So there are two trend lines. So in an uptrend, this trend line is called an uptrending. So in an uptrend, this trend line is called an uptrending support. So how do you draw this? You look for touches. One or more, two or more touches are enough. You get this touch, and then you must just draw it straight. Wherever the market is gonna come back, that will be a rejection, and then you look for your confirmations, and then you go with the market. So these the uptrending supporting trend line, and this is the uptrending resistant trend line. So how do you do? The rule is here, and it's simple. You must only buy low and sell high. So in an uptrend, the rule is here again. In an uptrend, you only look for buying opportunities. Buy low and sell high. And in an uptrend, you only look for buying opportunities. Meaning this is an uptrend, so now you are only going to look for buying opportunities. So now affirm the market is here. So the market it's at a high. So this is a higher high, this is a higher low. Higher high, higher low. Higher high, higher low. Higher high, higher low. You see? Okay. Okay. Now affirm the market is here. So now the market is in a bullish trend. You only look for buys, and then it says that you must only buy low. When you are buying, you must buy low, and the market is high, so you must wait for it to come to this trend line. Once it approaches this trend line here, once it comes here, you look for your confirmations. So confirmations are like this. It's either it should be a rejection from the trend line, a rejection from a zone, candlesticks, a rejection from the 61.8. That's the last number for Fibonacci, and things like that. So when the when the market comes here, you must look for candlesticks such as this one. There's a candlestick that should be like this. This is called is it called the harami or something like that? So this candlestick should be red, and then it must give you a green candlestick. After this, if it gives you a green candlestick like this, and then it closes, then from after that candlestick closing, then you execute your trade. That should be here now. And then, so that's a rejection here, and this, it's a rejection on the trend line, and it's a rejection on the zone again, because there's a zone here, this zone here. So we were talking about so guys, we were talking about floors and ceilings. Let me just erase this. So guys, we were talking about floors and ceilings. So it's actually, it's what's happening here. We are also in a situation of a floor and ceiling. Let me just finish erasing this shit. Okay, so the market rejected on a trend line, and it rejected on a zone again. So this this was our it was our ceiling, and then the market bounced, and then it came here, it came to the floor, and then it broke out. That's what I told you, most. It breaks out, and then after the market breaks out, and then you see it coming down. The fuck is happening? Okay. Hmm. There's something happening here. I don't know what. Okay, let's continue. But this is what I don't want here. I don't want this shit here, man. Ah, fuck. Let me just draw the whole new thing. Okay, guys. Okay, so we were like, okay, so these are our zones. Shukwat was about the ceilings and the floor. So the market came in, and then it rejected, it bounced from the ceiling, and then it came to the floor. Share up floor, man. Oh, you must look for your, now it came to the floor, meaning it's rejecting this zone. This zone was probably like this. It's rejecting this zone, and it's rejecting this trend line. And then you must also look for your candlesticks. If it gives you a candlestick like this, candlestick pattern like this, which this one is red and this one is green. When this one closes, let me say this 1 hour time frame, 1 hour time frame. So let me say right now the time is fucking shit. Okay, right now the time is 22:50. So when it's gonna be 22:59, that's when you should be ready for it to execute. When it's 23:00, that 1 hour candlestick, it will close, and then you must enter. Enter when it confirms, when it closes. Don't enter before it closes. If you enter before that candlestick closes, then you are gonna do things. So okay, so floor and ceilings, floor and ceilings, floor and ceilings. So the market came in, it rejected the ceiling, and then it came here, it bounced off the floor, and then it broke out. When it breaks out, you look for your what, for your new ceilings. Then it came, it rejected, it bounced off the floor, and then it came again, it broke the ceilings. Once it broke the ceilings, you look for your new once it broke the ceilings, you look for your new ceilings again, because that ceiling was broken, meaning it's gonna become the floor now. And then the market comes, and then they reject that floor, and then moves up again, it breaks your ceilings again, you look for a new ceiling. You see, you look for a new ceiling, the market comes, they reject this floor, because this ceiling now becomes a floor. You must now put that thing in your mind. this support and the resistance. The what, the ceiling is a resistance and the support is a floor. So now when the market breaks the resistance, the resistance will become the support, and then the market come, then you must look for a new resistance, which will be this one. And then the market will come to that, to come and reject the support, and then it breaks the resistance again. After breaking the resistance will become the support. You see, that's how it goes. Okay, so now I'm gonna teach you about the shifting now. Shifting, when the market is shifting from a downtrend to an uptrend, or from an uptrend to a downtrend. So let's go with from a downtrend to an uptrend. So the market moves like this. So now this is how it goes. The market was moving, so it was moving high. The reason why, guys, how should I put this, how do you know when the market is gonna change the trend from being bullish to being bearish? This is how you know. Once the market takes out, so the reason why the market is still not, the reason why okay, so now I'm not talking about this, so don't concentrate on this yet. Let's just concentrate on this manga. Okay, so the reason why the market is still going bullish, it's because the market didn't take out. Once the market comes like this, so this is a floor. This is a floor. Once the market comes like this, and then breaks the floor, and then give it a retest, which now this was the floor, and then the market gave it a retest, meaning that it's gonna become the ceiling now. Becomes a ceiling, and then the market should go down. You see, that's how the market shifts. Same thing here. Okay, the market was going up, and then it came to retest, goes up, and then, so here are the support and the resistance on this. So now the market, came to break this uh higher low here. It came to break this higher low, like the market didn't reject from here and then went up right now. It broke out. So now when the market breaks out, you are not guaranteed to sell, because it still didn't break this higher low here. Once it breaks it, so you wanna see the market breaking the higher low, and then you wanna see it giving it a retest from here, and then down. So that's what you wanna see. You see, and then from there the market shifted. It's shifting now. It's moving from an uptrend to a downtrend. You see, that's how it shifts. You wanna see the market taking out this low. So long as the market, so long as the market is, so long, like when the market is here, I mean, let me say, when the market is here, then moving down, so long the market is just above this, this floor or ceiling, so long the market is above here, then you're just looking for buy. Once it breaks, that's when you're gonna look for sales. You see, once it breaks here, that's when you're going to look for sales, selling opportunities. Okay, so I'm gonna show you things on a real life market. So I'm gonna show you guys here about the uptrends and things that I was preaching about. Okay, let me just put my phone on a landscape mode. Then what are we going to trade today? Check. Okay, so like this, what the rule number one, what did he say? You must always first check where the market is moving. Is it moving in a downtrend, or is it moving in an uptrend? So now the market was moving in an so the market was moving in an uptrend, and then it came in a downtrend. But overall it's an uptrend, because the market, for it to become a downtrend, for it to become a downtrend. So there's a zone here. So guys, there's a zone here. There's a zone here. That's a zone. So for the market to for you to start looking for selling opportunities, to start looking for selling opportunities, the market should break this zone, and then retest it, and then move down. At this retest here now, that's where you are gonna look for rejection candlesticks such as this. Uh, such as this. This should be green and this should be red, and then you wait for it to close it, and then that's when you are gonna put your selling opportunities. So back to the structure of the market. So guys, the market is always it's not always the market is not always perfect, so it won't give you a perfect, it won't exactly give you perfect movements. It's gonna be like this, and it's not always guaranteed that the market has to touch the trend line. Sometimes it doesn't touch the trend line. For example, just nothing is guaranteed in forex. It's not guaranteed profit, like at these moments here. Like the market failed to touch the trend line, and here also it failed. Okay, so the reason these where your rules comes in. You'll be like, no, I'm only gonna trade once the market touches the trend line, and that should be it. You must not be finding yourself trading, executing trades, or where the market didn't completely touch the trend line. So you mustn't do that. So guys, earlier we talked about three movements of the market, which is a downtrend, an uptrend, and a consolidation mode. So this is a downtrend. So the rule is here: in a downtrend, you only look for selling opportunities, and you must only sell high and buy low. Sell high, buy low. You must not find yourself uh, executing a selling opportunity, but you are selling here. No, you must only sell here, here, and here. Sell high, and then when you are buying, you must only buy here, here, and here. But I'm not encouraging you guys to look for buying opportunities in a downtrending in a downtrending market. So this is what I was talking about. This is about the ceilings and the floor. So I'm just gonna put my ceilings. So this is my ceiling here. I'm focusing on this one. That's my ceiling. That's my ceiling. And then so these all support and resistance zones. Support and resistance, which is ceiling and floor. These are the zones. So I'll put one here again, because there's a rejection here. You see here, it bounced from here to here, from the floor to the ceiling, and then it came, and then it came, and then it broke out. It broke the floor, and then it went down the floor, and then the floor became the ceiling now, and then it went up, and then it rejected. It bounced from the ceiling, and then moving down. So let's move down. Let's take it down. Let's take it down further. Let's take it further, and then there's a zone here, and then from there It moved from the ceiling and then it came to the floor. Then from the floor it went up, but it failed. It failed to go and respect here, and then it came down again. You see, that's how the market moves. It moves like that. That's how it moves. So your duty is to execute high, sell high, buy low. So you let me say okay, let me say the market is let me say the market is here. Now the market is here. From here, from here down, you are not seeing everything. This is not here. Let me just assume that the market is here. Okay. So now the market is here. What do you look for? You must wait for the market to give you a blue candlestick. This blue and this blue and it can also be green. You must wait for the market to give you a blue candlestick, which is bullish, which means the blue candlestick. It means the market is going up. It means the buyers are in control. So buyers are in control, but for you, you wanna sell. So for you, you are looking for selling opportunities. So you must wait for the market to give you a red candlestick, which actually means sellers are now coming in control. You see, and you are looking for sales. So wait for the red candlestick to close. After it closes, you put your trade here, exactly here when the market closes, and then you chop from here to here, and then you put your take profit somewhere there, because you know when it comes to this trend line again, it's gonna bounce from here to back to the uptrending downtrending resistance. It's gonna bounce from here to here. Hence you must take your take profit here. But if you don't wanna take your take profit here, you can hold till down, because it's in a downtrending this is a downtrend, meaning the market is gonna go down. So if you don't wanna take your take profit here, you can just hold till further. And guys, this is how the market changes. So I told you about the I told you guys about market. Wait, is it supposed to be here? I told you about the market, guys. I told you about the market shifting. So this way it shifted. So the market was supposed to reject here. It was supposed to reject here and go down, but it failed. It failed to reject here, and then it broke out of the trend line. Guys, when the market breaks out of the trend line like this, it's not official that the market is now shifting from a downtrend to an uptrend. It's not official. This is official though, but it's not always official that when the market breaks out, it's gonna be. But it's only official when the market, when it takes out this high, when it takes out this high, when the market, when the price closes this high and then give it a retest. That means it's gonna go back, it's gonna go up, because it took out this high here. But if it was still under here and then it gives you a blue candlestick and then the red one, it can still be a confirmed selling opportunities. But once it breaks this high here, once it breaks this high, and then this ceiling is gonna become a floor now. Hence it broke out and then it came to retest and then it went up. So that's how it works. And I also want to show you guys an example on an uptrend. Probably my chat is not refreshed. My chat is not refreshed. You must just get, for you to perfectly draw trend lines, is that you must get a first touch and then a second touch. You must cater for more touches. Just cater for more touches. The thing about the market is that it likes repeating what it did. If it if it wants if it if it rejects twice on 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 a trend line, meaning the third time, uh, it's approaching that trend line, there's also a possibility, possibility, maybe a 90% that it's gonna reject also. Okay, so that's your downtrend line, and then you take this one again, you draw up, you cater for more touches, okay, so the market came from here. So in an uptrend, so an uptrend, the market is moving up. Overall, it's an uptrend, it's moving up. So you look, you buy low, and then so the market rejected here, and then it also came to reject here, and then it went up. So when the market is here, so and for you, you have a rule that you must only buy low and sell high. So now the market is high, so you must wait for it to come here, because it once rejected here and it once rejected here, meaning there's also a possibility for it to reject here. You wait for it to come here. So when it's coming, it's gonna come down, or it's gonna come down with a red candlestick, because that's whenever the market is selling, it sells with a red candlestick. And then here's a red candlestick here, and then for you, for your buy entry to be confirmed, you must for your buy entry to be confirmed, you must what? You must wait for the market to give you a buying candlestick, which is a blue candlestick or green. Once this candlestick close, let me actually zoom in. Maybe you guys cannot see. Once this candlestick closes, the blue one, this blue one, once it closes, you put your buying opportunity exactly here, and then and then your stop loss somewhere here. Then the market goes, and then it comes back a little bit. So this is where now your emotions will come in, and if you are not your mindset is not strong, you end up closing your trade thinking the market is gonna go down, but the market is just coming back to it, to reject this zone, and then to go up, and then you must take your take profit here, or you can still hold, because the market overall, the market is gonna move up, and that's what it did. That's what it did. It went up. It went all the way up to till 29,000. uh went up till here, till 29,000.24 points. So that's where it went. So you could have taken a take profit here, or just hold till the, it's in an uptrend. So that's how you are supposed to approach the market, in terms of so guys, that's how you are supposed to approach the market in terms of knowing the structure of the market. Guys, you must know the structure of the market, and I wanna leave you with uh, things that you guys should do, and you should really put work in it. Guys, never, if you're finding yourself in a stage of a beginner trader, or you don't have a lot of money on your account to take a lot of risks, guys, never, never and ever sell in a buying trend. When it's an uptrend, you must only look for buying opportunities, and when it's a downtrend, you must only look for selling opportunities. See, that's how it goes. And you must never, you don't want to find yourself trading in a consolidation zone. A consolidation zone is when something like this. Is it here? Let me see if it's nothing. I cannot say consolidation one here, but I'll show you guys a little bit of something, how it looks like. This is how a consolidation moves. Like a consolidation is just like this. You can scalp though, but when you're scalping, you must know what you are doing. So consolidation, it's called a range. When the market is in a range motion, it's not going up and it's not going low. It's just there doing just like that. That's how the market. That's what or we call that's what we call the market being in a range, or the market consolidating, you see. So there's also a good thing here, you can also do like this. So you can actually see, you can this draw like this, then also draw like this. So the market is moving up, it's a bullish movement, so we look for sell entries, I mean buying entries. So now the market was inside here, like it moves here and then it rejected here and then it went up and then it rejected, it came down, then it rejected, and then now it's breaking out. It was supposed to reject from here and then to down, but it broke out. So now after here, this is what you're gonna expect, and this is what you're gonna this is what you're gonna expect. You expect the market. So now it's actually like this. So guys, it's here. You would wanna see the market taking out this high. So there's still a possibility for the market to go low. There's still a possibility for the market to reject here. We know that it broke out of this trend line, it broke out of this channel, but there's a possibility for the market to reject here. Once it gives you a red candlestick here, it can reject and then come all the way down. But what you want to see from here for you to be looking for buying opportunities, that you must wait for the market to break out and then retest this zone here, this black zone. You must reject that, retest that zone, and then you must wait for rejection candlestick here, which it will be a red candlestick first, then it must second you must wait for a green candlestick or blue candlestick, which means the market is gonna go bullish, which is buy. So after that candlestick closes, and then you execute your trade, and then you go with the market up, and then you must put your take profit somewhere here. So that's how you roll. Okay. So actually, so this was a ceiling, hence the market came down to the floor, and then the market broke out of the ceiling, meaning this ceiling is gonna become our new floor. The market is bouncing, and then here up here, that's our new what our new ceiling, and we are expecting the market to go there, and break, I mean, and reject. If it doesn't reject, then it will break out and retest again, and then it goes like this, vice versa. So that's the structure of the market, and that's how you guys should be controlling this. Okay, so if you made it far, if you are still watching this video and you made it this far, I would just like to thank you, like thank you very much, and asking you guys like to subscribe to this YouTube channel, and like this video and share, so we get more subscribers, and share more information with other people that are not aware, and people that actually needs this this information. Like, you shouldn't be watching this alone. I'm also at a stage where I'm trading, but I'm also at a stage where I didn't make it yet. I'm not a successful trader, but I'm helping, cause I'm just helping. I'm helping people, cause I believe I'm helping people because I believe you need to give to earn for you to live and learn. See, you need for you need to you need actually, I believe in helping people. When you are helping people, God will also give you blessings, right? He will give you blessings, and I believe in so I'm gonna keep on helping people. And if you're struggling with something, I mean, like, you should feel free and DM me or something like that. Just get in touch. I'm helping for free. I'm dropping all these. I'm gonna drop all these videos on YouTube, and you can download and do anything you want with it. So PKH your mentor signing out. Danko.